More and more employers these days also grant options to employees as part of their remuneration package. The taxation of options from a UK perspective is slightly different to how RSUs are taxed, which are effectively just shares. From an options perspective, the key thing to realise is that there's a difference between when an option is granted and when it's exercised and what the vesting period might be. So for example, you might get an option issued to you by your company in 1 year and it has a 2-year vesting period, but once it vests, it's still an option and it won't actually become a marketable security, i.e. the underlying share, until you actually exercise it, pay the strike price and receive the shares. The difference this creates from a tax perspective is that whilst with RSUs, because they become a liquid security, they can be sold at the point of vest, and so the tax is relatively straightforward. With an option, you can't sell the options typically when they are vested. You have to wait until the point at which they are exercised by the employee. As a result, the way the tax works is that they're taxable at the point you exercise them, not at the vesting point. What this means is obviously that that's the time you crystallise a tax event. And so what's really important is when you sell the underlying shares, that's the point where you get taxed. And again, it's taxable to income tax, not to capital gains tax. Once you've exercised the options, if you keep the shares, they will then switch into the capital gains tax regime because you've just got an underlying security which is a capital gains item. Whilst options are taxable at exercise, what makes it more tricky is if you have a period of time overseas during the vesting period. When you come to determine what your income tax liability is on your options, if you've spent time overseas, you calculate the proportion that's due in the UK based on the vesting period. So you could have a situation where you have a 3-year vesting period with 1 year outside, so 2/3 is taxable in the UK, but you might hold those options for another 2 years when you come to exercise the option and sell the underlying shares. So the allocation would still be on a 2/3, 1/3 basis, even though it's 5 years from grant to when you actually exercised the option and sold the shares. So it can get a bit complicated, so it's always worth getting in touch with us here at LSR Partners, as we have a huge amount of experience in dealing with this. One final point is always remember FX. Again, often employees in the UK are working for, say, US companies, and again, there can be FX implications on selling the shares, which you need to take into consideration.